Good morning, everyone, and welcome to the first session of the 2020 Inclusive Fintech 50 virtual event series. We're delighted to have you with us. My name is Maha, and I'm the Senior Director at the Center for Financial Inclusion, CFI. We are a global independent think tank that conducts research and advocates for evidence-based change to ensure that all people can make use of financial products and services to improve their lives and prosper. As you may know, Inclusive Fintech 50 is an initiative that elevates early-stage promising fintechs driving financial inclusion through a competitive process. This year, which is our second year, amid the unprecedented challenges early-stage fintechs are facing, we received over 400 applications, and we thank those of you who took time to apply. Through a rigorous selection criteria and independent judging panel of 32 judges, we selected 50 winners, 2 of whom are on the panel today. The initiative is funded by our global sponsors, MetLife Foundation and Visa, who also join us today in this panel, with support from Action and IF50 and additional funding from Comic Relief, Jersey Overseas Aid, and BlackRock. IF50, for short, is run by the Center for Financial Inclusion, and I'm really pleased to announce that yesterday we published IF50's Flagship Report, which draws on the data submitted by all of the applicants, and provides insights as to how they're adapting to the economic uncertainty currently to advance financial inclusion and resilience for the 3 billion people who are underserved financially worldwide. You can find the report on the IF50 website, and I'll be putting a link to the public chat that you'll see. So before we begin today, I would like to just go over a few housekeeping rules. So as you have noted, the audience today is on mute, but we do encourage you to submit questions as they come. There is that chat function that you'll see, and we will definitely keep time aside to answer your questions. I'd like to introduce our esteemed panelists today. We have Mark Pickens, who is the Senior Director of Social Impact at Visa. Mark helped set and execute Visa's strategy for social impact and helped launch the company's financial inclusion function. Visa is a co-founding sponsor of IF50, so welcome, Mark. Evelyn Stark, the Financial Health Strategy Lead at MetLife Foundation, partnering with nonprofits, fintechs, and academics across 40 markets to build financial health for all. MetLife Foundation is also a co-founding sponsor of IF50. We have with us an IF50 winner, Li Jen Li, who is the Chief Operating Officer at Reach52. Reach52 is a recipient actually of the IF50 cash prize that was given to 2 fintechs for their contribution to improving the financial resilience of their customers. Reach52 provides microinsurance directly to rural consumers through their marketplace service and networks of predominantly female area managers. They operate in Cambodia, Philippines, and Singapore. And last but not least, we have Andrew Mutua, who is the founder and CEO of PesaKit, based in Kenya, and the recipient as well of the IF50 cash prize. Considered the bank branch of the future, PesaKit enables mobile money agents to better serve their customers and manage their financial health, operating in Kenya and Tanzania. So thank you to our panelists and welcome today. I came across a quote that I think is really apt for our time, and actually I think for this panel. President John F. Kennedy once said, "The Chinese use 2 brushstrokes to write the word crisis. One brushstroke stands for danger, the other for opportunity. In a crisis, be aware of the danger, but recognize the opportunity." The COVID-19 pandemic has really underscored the importance of insurance. And actually, according to the IF50 data, we found that payments and savings and financial management services grew between December 2019 and May 2020, the early days of the pandemic. We found that some of the savings and financial management fintechs are either now offering incentives to save in flexible ways or bundling services such as insurance and payment on top of their core products to increase their scale. But to understand whether fintechs are helping to build the resilience and financial health of their customers, which we'll be discussing today, we must really begin with understanding the customer. Research from Innovations for Poverty Action has found that improved access to and usage of financial services can help people become more resilient. they're better able to mitigate, cope, and recover from shocks without compromising future welfare. And they found that in particular, insurance, credit, savings, and digital payments increase resilience through various levers, often in small-scale shocks. Now, earlier this year, we partnered with BFA Catalyst Fund to conduct a survey with over 600 customers of IF50 applicants. And we found what was likely to be expected. Users of inclusive fintech startups in emerging markets have seen their incomes drop, unfortunately, and their spending on essential items and services increase. And while they are taking advantage of digital financial services, in fact, almost half of the respondents are using their mobile money accounts more frequently since the pandemic began. They're worried about repaying their loans and don't have enough savings and insurance coverage to help manage risk. So we're here today to discuss if and how fintechs are paying attention to their customers' needs and how they're able to help drive resilience. We have heard from fintechs that the pandemic has provided them an opportunity to be closer to customers and that adversity is inspiring creativity. We're seeing that fintechs are offering flexible ways to refinance debt, reduce transaction costs, smooth consumptions, and provide saving options. At the same time, however, it's important to note that the global crisis will have long-lasting consequences. People and financial service providers will develop a new understanding of their priorities. So will fintechs be able to respond, and what would that look like? As the world emerges from or perhaps learns to live with the pandemic, fintechs will have to make intentional efforts to diversify at every level to meet the challenge of reaching underserved customers with products that solve their needs. So I'd actually like to now turn to our discussion with our panelists. I'm really excited about that today. And I want to start with Mark. And before I just start, I just want to see if we have any questions coming in. Mark, surveys conducted by CFI, World Bank, BFA, and others on small businesses, unfortunately, they indicate a grim picture for small businesses globally. If they're not being forced to shut down because of decreasing revenues, they're actually taking other cost-saving measures. So given Visa's work with fintechs in offering innovative solutions, has Visa changed its investment strategies towards solutions that can specifically help small businesses mitigate economic shock? Can you tell us a bit about what you're seeing and changes you've made, if any?
Yeah, the short answer is yes. This is a time in which we know we need to act, with speed and with deliberate efforts. We understand how important small and micro businesses are to economies. They're virtually all of the retail points in the world that people would get essential supplies for their families. They also create more than half of the jobs in GDP in most markets. So small and micro businesses are just, the backbone of economies. And if we all know that so many of them are having extra and deeper difficulties with COVID. Many of them, we did a global survey of small businesses and found that less than half of them had any online business before COVID. And well more than half of them are now trying to get online and digitize their business. That's not an easy thing for everybody. So because of that, because of the need, we have swung into action behind a global commitment that Visa has made to digitally enable 50 million small and micro businesses worldwide in response to COVID, but also because it's a path to more inclusive economies. As we recover from COVID, we need to keep our eyes on that goal as well. So some of the things we're doing differently, which is where your question was, Maha, is in immediate response to COVID earlier this year, we sent out street teams to visit small businesses in a variety of countries to help them cope with that big shift in consumer behavior from in-person to online, cash to digital. We created small business hubs in a couple dozen countries, and we're building more. And what those are not just places where small businesses can find out about how payment products can help them digitize their business, but kind of one-stop shopping for everything they would need in terms of skill building, tools and accounting, inventory, services, how do I do advertising online, get it all in one place to help me digitize my business, either for the first time or to step up that online presence. Those are things that we're doing, directly to help small businesses. The Visa Foundation is committed to $200 million to support small businesses worldwide, with a major focus on female entrepreneurs. That's rolling out this year and will continue as an important initiative over the next couple of years. And even with that burst of activity investment, I think Visa, we know our core business as a global payments network, connecting businesses, consumers, and financial institutions, is where we must think about our response to COVID. And so for us, a big piece of that is fintech engagement. So particularly along digital wallets, digital banking, access to appropriate credit, B2B payments, cross-border remittances, bill payments. And that can take, how we engage with fintechs can take several forms. And these are, all of these are areas where we stepped up this year. It can take the form of venture investments in fintechs. Just this last week, we completed the acquisition of Yellow Pepper, which some of you in Latin America will maybe be familiar with. Visa is also a limited partner in Action Venture Lab, a VC fund that's focused on fintechs to reach underserved consumers and SMBs. But maybe more than anything else, our job, and I think this is a collective effort that's required here, is making it easier for fintechs to merge their efforts with the capabilities that already exist in different payment networks. So, for example, our fintech kind of accelerator, Visa Fast Track, we've upped that almost 400% year on year in terms of the number of fintechs that are participating. And the company is already engaged with many of the Inclusive Fintech 50 winners. For example, Neat, which helps small micro businesses engage in cross-border trade. It's actually not easy if you can't get a dollar-denominated account to receive payments from someone you're selling stuff to. They try to solve for that. Or Self in the United States, which is helping thin and no-file customers build their credit scores. And I'm really looking forward to, hopefully we can be working with Paysaket and Reach 52 as well. They're doing some really interesting stuff. It's a lot easier than ever for fintechs to get into global secure payment ecosystems where the consumers, the merchants, the financial institutions already are, and bring the fintechs nimbleness and innovation to the table, which is really how we're going to get more consumer-centric financial services and be able to respond in a nimble and effective fashion to COVID and drive for more inclusive economies as we recover.
Great, thanks, Mark. And as I mentioned earlier, that's one of the findings that we had, was the agility that fintechs are able to leverage in trying to respond to customer needs. And Evelyn, I was hoping that I could sort of turn that question over to you. We've heard from some fintechs that the pandemic has actually given them the opportunity to become closer to their customers, in an attempt to improve their own product offerings. And, we've just heard Mark talk about the customer centricity. It is an intuitive term, customer centricity, especially during a pandemic where people's need more and perhaps new types of financial services to meet their needs. I actually once heard someone say recently that designing a product for a customer without their input is like painting someone's house in colors you've chosen for them without their permission. And so have you seen progress among financial service providers, including fintechs, in employing customer-centric principles to design products? And how does that contribute to what we're talking about, is this resilience, sorry.
Great, thanks, Maha, and everybody else on the panel, and thanks for inviting MetLife Foundation to join you here today. I fully agree. I love talking about customer centricity because it does seem so obvious and intuitive. We need customers, otherwise we will not have successful businesses. But that doesn't mean we're very good at not choosing the paint colors for them. And so, I do think that from what we've seen among our fintech partners and actually our in-person financial service providers is much greater sense of customer centricity, much more interaction between the customer and the organization out of sheer necessity. So going back to your great quote about this being dangerous and an opportunity, it really has been. The idea that customer centricity is a big deal is not just during a pandemic. According to Bain, 90% of the top financial services companies have customer centricity at the top of their strategic agenda. And yet most people don't feel like their financial services companies are actually delivering for them. Customer-centric companies, according to Deloitte, bring in 5.7 times more revenue and are 60% more profitable than their counterparts. And yet we know that this still isn't translating into feeling that are particularly responsive or particularly customer-centric. And I think that this resiliency and responsiveness that's been such an important part of the pandemic has actually seen greater uptick in real customer centricity. Of course, in our part of the industry, inclusive finance and inclusive fintech, we are in a more pronounced view of this because it's not just getting people to use our products frequently, but for that usage to lead to a real and positive impact. And that's a lot harder. So some folks look at access, usage, or convenience as proxies for impact, but there's quite a gulf between good customer service and the goals of financial inclusion, or what we call financial health. Just because things are convenient and easy to access, it doesn't mean that they're going to be good for you. McDonald's is profitable selling cheap hamburgers, ubiquitous, they're fast, but not healthy at all. So it would be much harder for them to try and create healthy food and service. And yet that's what the fintechs here in IF50 are doing, trying to reach scale, be profitable, and deliver healthy financial tools. So one organization, a couple of organizations that I've seen been really responsive during this time period is one of our nonprofit fintech partners here in the US called Savor Life. So they have a large platform of savers, and they saw a massive increase in engagement of their clients and increase in savings activity. And those were two different things. Not only were they more actively saving, they were more actively engaging with the platform. And this is one of the great things about fintech: much more responsive, much faster, and much closer to the client. You didn't have to wait for the customer to come into the branch. You could push a message out. You could explain how to gain access to government funds that were available. They did look at their data. They did send surveys to clients, and they discovered that there was a mismatch who could be getting government program funds, government subsidies, and weren't, and then put out the how-to so that they next saw an increase in savings coming from customers who had accessed government programs. Americans aren't great savers, but because Savor Life gave them the information and the platform, access was there, it was convenient, and they gave them the information, they saw massive increases in savings. So I do think that this time period is an opportunity to demonstrate the best in fintech towards resiliency and really shift the view of the customer. So I actually want to move quickly over to hear from our colleagues from IF50 to hearing how they and our industry are going to continue to learn more about their customers, being more iterative and responsive. And I want to learn how they're measuring to understand impact and how they're going to leverage the tools to improve impact and, of course, remain profitable. So thanks again to everybody here, and I hope to hear more about what's going on.
Thanks so much, Evelyn. We were breaking up a little bit, but we definitely, really loved what you were talking about in terms of the customer centricity. And before we turn to Andrew and Lee-Jen, and in fact, Lee-Jen and Andrew, if you would like to respond too, but you had mentioned about, some products or services that are focusing on access, usage, and convenience, and going beyond that in terms of impact. And, I'm curious, maybe Mark, they may actually, the idea of access, usage, and convenience can translate into saved time, saved effort, and greater choice. So could be signs of, benefits in themselves. What would you say to that, Mark?
Ma, you introduced the panel with reference to a Chinese ideogram, and there's another one that I like, Mao Dun. It's contradiction. Basically, the first part of it is a reference to a kind of a fable, the spear, about a spear that can pierce any shield, and then the second half is the shield that can block any spear. So you've got, this contradiction of these two things that are irresistible to each other. And some might say that historically customer-centric financial services is a contradiction. As Evelyn was saying, I think there's experience of a lot of people that doesn't accord with what financial service providers say that they're doing and making their services more user-centric. There's certainly still a gap there. And it's been very apparent to me and some of the people that I've met in my time. I remember a guy, and I've told this story before, so sorry if anybody's heard this one, I'll be super quick. But I remember meeting a guy in Uganda who was a motorcycle taxi, and he was saving by taking bills and wrapping them in like industrial grade plastic and sealing them with epoxy resin and then dropping it into the petrol tank of his motorcycle, because he felt like that was the safest way for him to save. And what he would have to do is guess how much he had in there or try to remember. And even if he was right, he still had to cut his petrol tank open to get the money back out. But he actually liked that because he wouldn't have the urge, the temptation to dip into it, to maybe buy beers while watching an Arsenal game or something on the weekend, or betting on the Arsenal game. It's a lot of that going on in some places with fintech, or fintechs enabling that in some places. And it just, that gentleman's story just really crystallized for me at a point in my life, in my career, of the sense of the gap. It wasn't that this guy didn't have access to financial services from formal financial service providers or even local savings clubs, but this was the best option he had. And it wasn't that good of an option because destroying his motorbike to get at his savings was kind of net negative savings, net negative interest rate. So, what I find super encouraging is that this year's cohort of Inclusive Fintech 50 winners, includes a bunch of fintechs like Reach 52 and Paysaket that are solving for needs of people like that taxi driver. We know that digitized financial services are much easier to rapidly test, iterate, and improve. And there's a lot of things that firms can do to do fast A/B testing, scouring the usage data, experimenting with pricing, et cetera. But I think we have to be collectively careful that we don't move so fast that we break things that ought not to be broken. Things like security, reliability, reasonable expectations of privacy, and hidden and inadvertent bias in algorithms that could easily end up delivering differential outcomes for lower income people, small businesses, women, and other segments and communities that are historically underserved.
Thanks for that, Mark. And Andrew and Legion, actually, I want to turn to you so to understand what you're doing on the ground. So we've been talking about building products around customers' pain points and improving financial health and resilience to shock. And we learned from our IF50 data that fintechs are building resilience by reducing transaction costs, smoothing income, or tweaking products, or providing income-generating opportunities to MSMEs. And so I was wondering if you can talk us through what your companies are doing specifically to help drive customer resilience to economic shocks. Andrew, maybe I can start with you in terms of what you may be doing to help mobile money agents in Kenya and Tanzania, particularly because in the pandemic, money agents can be hit hard with social distancing and lockdown measures, yet payments is something that we saw grow as a growing need. So interesting to hear from you in terms of what features enabled you to help improve resilience.
Yeah, thank you, Maha. Thank you for having us here. Thank you, Mark and Evelyn, for giving us some context to the conversation. So how we usually, at PesaKit, we serve customers in 4 ways. Our main focus is mobile money agents, and we try and make them more efficient and more profitable. And that way, what we see is they become better last mile distribution points for financial services and digital commerce. So the first way we do it is we give them cash flow analytics. So we give them insights to help them optimize their operations and their liquidity. Then secondly, we give them access to working capital to rebalance their float when they need it. Then thirdly, we transform them to become digital merchants, so they're able to earn additional income by selling digital goods such as airtime, tokens, microinsurance, and the likes. And also, the last thing which we introduced this year is something we call Pesa Kit Address, where we're transforming these agents to become e-commerce fulfillment points for their communities. So they can become ordering points, delivery, payment, or collection points. So how I usually see resilience from Pesa Kit's point of view is in a couple of ways. So the first one is, see, for an agent, just to give you maybe a persona, you'll find in Kenya, you'll find there's an agent who is serving M-Pesa, then they're serving Airtel Money, maybe they're also serving Equity Bank and KCB. So it's one agent whose liquidity is spread very thin because he has to have some float or some money in the different digital wallets for all these services. And so at times it's so hard for them to predict where to put money. Should I put my money in KCB? Should I put my money in M-Pesa or Equity or Airtel? So already with the little resources they have, already their money is stretched very thin. So how we enable them, how we enabling them at the moment is with the Pesa Kit app, they're able to store liquidity as one value within Pesa Kit. Then they can distribute it to any service when they need it. So if I need to serve M-Pesa, I can just push it from my Pesa Kit account to M-Pesa or to KCB and the likes. And all those transactions are free within Pesa Kit. So if the agent is topping up e-value from one point, they're able to distribute it accordingly and also pull it based on the need of or the service of the customer. And so if, let's say, they don't have enough liquidity for M-Pesa and they actually don't have e-float on any other account, they can borrow from Pesa Kit and use that to serve the customer. So that they don't miss that revenue opportunity. The cash flow analytics help them to be able to plan their day because we are telling them how much cash they need for the day, how much float they need, what's the best opening time, closing time. So during this pandemic, such insights are very important because it could help inform how they run their business. Because at the moment, we still have a curfew in Kenya that you have to be home by 10. So most places need to be closed by 9 p.m. Before, just about 2 months ago, everywhere had to be closed by 7 p.m. So you saw that there was just about maybe a 5-hour window for you to do business. And there's a small business with 83% of our customers being the owners of the business and they also work there. You can see already the household income it has declined because of the minimal working hours they have. Then they can also if let's say you go to rebalance cash at the bank, and then you will lose a lot of revenue opportunity because you just have very minimal hours to go rebalance, come back and operate your business. So we've seen a lot of value in terms of how we are driving resilience to customers in how we're enabling them to earn more revenue, being able to optimize their liquidity and optimize their operations. Then lastly, what we were able to do during this pandemic, because we couldn't travel to or meet our customers, and because we also the limited amount of time we had, and also at Pesa Kit, everyone was working from home, we decided to digitize the entire customer journey. So how we recruit an agent, how we KYC them, how we verify them, to how they become transacting customers. So I've seen a lot of value in that as for us as a fintech, because it's reduced a lot of time and also a lot of cost. But we've also found a new way that we will go maybe into the new normal or post-COVID-19, where that's how we will now operate fully, where all our operations will now become digitized from how we acquire customers and how we help them transact and earn revenue. So those are the changes I've seen with COVID-19 affecting our businesses specifically and also affecting the agents we serve.
Thanks for that, Andrew. And it's interesting to see how you're able to use data and sort of real time to help then improve your products or the services that you're providing. Lee-Jen, maybe I can ask you the same question, especially with Reach 52 providing an essential service like health right now to rural consumers. I'm just wondering if you're able to tell us a little bit more about how you may have changed your operations or your approach during COVID-19 and how you think that has helped improve the resilience of your customers and who those customers are. Thank you.
Yeah, sure. So thank you very much to the Inclusive Fintech team again for supporting Reach 52's goals of delivering healthcare and financial resilience to underserved populations, and for inviting me onto this panel. I think in the work that we do, especially reaching out to rural communities that doesn't have access to internet connectivity, this is where we are trying to really plug the gap, making financial protection more accessible and as a necessity to communities. I think one of the examples is, really since we launched in India in September, we have seen a huge spike in demand for additional insurance protection. I think also because our customers are especially vulnerable to the situation, and the microinsurance plans that we offer to them to help them the protection against unexpected death or illnesses. So one of the examples is one of the families that we have insured for them was able to make a successful claim when one of the family members had kind of passed on from COVID. It was a very unfortunate situation, and it was a stressful time for the family. But with the insurance policy that they could purchase, it alleviated some of their more immediate cash needs. So I think it's one of the ways that we could offer value to the most vulnerable segment of society. I think the plans we offer also come from a range because we noticed that if we earn just $50 to $100 per month, they cannot afford a very expensive plan. So plans are tailored like a very affordable range of from $2 per day, $10 a year. So I think in terms of the coverage, it is able to meet their needs at least for the short to the medium term. And I think other ways that we have been impacted by is really through our health outreach activities because we want to provide end-to-end services for them. We've had to fundamentally change the way we operated on the ground. So in the past, we used to organize a lot of health outreach events and education events in a physical setting to share information about chronic disease management and also to promote, medication because they are stopped out and they're not able to see a doctor instantly. But with the strict lockdown in some of the countries like Philippines, doing their enhanced quarantine measures, they only had like some of our teams and our residents in the communities was basically not able to go out from their house for about 2 to 3 months, and only one family member could leave the house at any one time, and they had to have checks and they would be approved to leave if they didn't have the requisite authority or permission. So what we did was then we had to really increase the level of healthcare services provided. So we launched telehealth, and pregnant mothers, instead of having to travel all the way to the hospital and risk exposure unnecessarily, they could talk to our in-house gynecologist, and we just charge them a small fee for this service. So I think that also was one of the ways where we could positively impact the community, and it was a way whereby we reached more than 200 mothers in a short just 3 months. I think social media also played a key role in our engagement efforts because with more people logging onto Facebook and Instagram, we then took the opportunity to develop solutions such as our COVID-19 symptom tracker chatbot, as well as our gender-based chatbot. So this is in partnership with different partners such as IQVIA, and we realized that because there's an increased home violence, the chatbot would then direct people to what is gender-based violence, what can you do, who can you reach out to, who are the support, and this was easily downloadable as I think these are some of the initiatives that allow us to focus on improving healthcare access as well as financial sustainability and resilience amongst the low-income populations in the countries where we operate.
Great, thank you. And I just want to respond to a couple of things that both you and Andrew said in terms of, you are taking, sort of listening to your customers and sort of adapting to that. One component of that I think is not really talked about, and I wonder if you can address it, is a role of trust that you also have to build with your customers in responding to them, but also allowing them to really tell you what their needs might be in building this customer-centric product. So I wonder how you might be working in this trust-building component with your customers, especially during a pandemic. Lee-Jen, like you said, some people can't even leave their house. So how are they trusting, the gynecologist that's on call? Is this need-based? So I'm curious if either of you could talk to that.
Yeah, sure. I think because we have been on the ground for the past 2 to 3 years and they have already seen us, they have worked with our field team, we train women within the community to engage their neighbors and their friends. So there's this basic level of trust. In addition, because we partner with the government very closely, we work with the public sectors, that allows the residents to kind of, have just an additional layer of trust to run some of the programs that we were able to. And I think during the times of, the lockdown, they were not able to access their regular medicine supply. So people with hypertension and diabetes could not as easily go to the drugstores or the pharmacy. So what we did was then we were able to deliver these medicines to their homes and just charging them a small delivery fee. So this allowed them to save in terms of time, as well as cost, because they could, not need to travel 1 to 2 hours to the town proper to get the medication in.
I think from PesaKit's point of view, where we've seen how we've been able to win the trust of customers is through getting recommendations and referrals. So because it's one agent recommending us to another agent, maybe probably they're on the same street or in the same town, that really helps. And in rural areas where, let's say, somebody has come from a city, let's say in Nairobi, and they go to a rural agent and that agent doesn't have liquidity, then they recommend to them something maybe they saw in Nairobi, like PesaKit. So word of mouth has really helped us at this point. Then what we saw from that is that led us actually to build an entire referral module within the app. So there are ways you can refer your let's say your friends to the platform, and there's some incentive for you. So that has been one of the areas where it's bringing us a lot of growth. Then the other thing I think when it comes to trust is if you can personalize the experience for the business owner, because see, with some of the data points we have, we're able to tell you, so like we're able to recommend a service for you, like we're able to tell you within PesaKit, maybe try and sell this good, let's say if it's an airtime, try and sell this airtime and you'll earn this commission. And we can even show you how much you'll earn before you're able to sell it. So those, just personalizing that experience for the customer really helps from a mobile app point of view. So when they get into the app, maybe you have a greeting like, let's say, good morning, Mark. Welcome back to PesaKit. Then you recommend, you give them an insight that will probably help them during the day. You recommend a product to them. So just that level of personalization is what has really helped us build trust. And I think that will go, when I look at what's the lifetime value of the customer, before we were looking at 18 months, now when I do some projections, I think we've increased it by about another 10 months to 28 months. So that's, if you get somebody who is recommended by another person, that person will have a lot more stickiness to the platform. And when you're able to personalize that service moving on, I think for us, we'll have a longer lifetime with the agents that we are now recruiting.
Great, thank you. So, I mean, what I'm hearing from both of you is that the level of personalization obviously helps in building the trust, but then also having these relationships and connections and providing that value that is needed for the customers, especially at this point, has helped you. Before we move on to some questions, I did want to ask all of the panelists here today that, you know, as we're talking about fintech's contribution to financial resilience, and Evelyn, you mentioned financial health as well. You know, through IF50, we found that currently fintechs are measuring their contribution to financial resilience through portfolio indicators that are proxies, and few are doing that through customer data and outreach. So I'm just wondering what role you think investors and lenders can play in helping fintechs measure the contribution to financial resilience, and what this may look like.
Sure, I'm happy to go first. You know, it's a bit of a trick question. You know, they should measure something that proves that it has more resilience, and at the same time, we don't have an accurate measurement of what financial services would increase resilience. But I think that that's part of our goal here. And our goal in the industry is to work with the data that providers can show us to do direct survey and direct research with customers and marry the two. I think one of the interesting things that we know about behavioral science and we know about human beings is that we are not always our own best narrator of our situation. So you see it all the time. People say, I really want to save. I want to save for X, and yet they don't save. So I think that understanding what people want to do and what people know is the right answer in a survey, and using the back end administrative data to determine where we have matches and where we can change products to actually deliver a back end that says your savings are going up, and a front end where the customer says, I want to save and my savings are going up. So I think we have a lot to move forward and learn here. I don't see an easy answer, but I think we're going in the right direction.
Would anyone else? Yes, please, Andrew.
I can go next. I think when it comes to measuring, maybe what my expectation from a fintech looking at big organizations, industry players, will be maybe to start looking at if there are any non-financial data points that we can use to measure resilience. So something like, you see, like for an agent, if an agent is more reputable, they usually get more customers. And reputation comes from some items that even for us, it's hard to measure within the data set that we have. So there are more, I think there are other non-financial points which that we can use to show that the services we are offering or the platforms we are providing actually bring resilience. So that's maybe an expectation or something I'll be looking forward to seeing in the near future, like a white paper showing other non-financial data points that we can look at.
Yeah, and I think that's a really important point that you bring up, that resiliency goes beyond financial services, and the products that you're offering as fintechs, while responding to customer needs, it can go, some of the product usages go beyond just the direct financial benefits. And sorry, I do have one more question, and this is really more towards Andrew and Leigh-Jen. And I'm just wondering that, what recommendations you may have for your peers who are, facing these unprecedented challenges. These are tough times, but you do have this agility that does set you apart from other providers, what recommendations you have in terms of contributing to your customers' needs and adapting in these times. I'm sure they're your peers who are looking to learn from you.
Yeah, I think really for us, it's listening to our customers. I think this is a very challenging time for all of our communities and residents. So we try to really and understand what they need and meet those needs. So for example, in COVID times, what we have noticed is a spike in demand for things such as first aid kits, masks, because they're not able to get it in the shops. So we try to source for these products and then send it to especially households that need it the most, and make it more accessible to these populations that are especially vulnerable in such situations. In terms of the products and services for microinsurance plans, then we try to be flexible and focus more on accidents, but really covering them for illness, hospitalization, so that they are able to get
Sorry,
some of
Bijan.
their...
I think we might be offline. Okay, I think we're back online. You can start, if you can start again. Sorry, Lijan.
Yeah, sure. So I think really in terms of our financial insurance policies, then catering more to the current needs of our population. So more hospitalization coverage, death and accidental death kind of coverage would be what our residents are looking out at the moment. So I think just being flexible, as well as paying a lot more closer attention and changing the configuration of what our products and services offer. Thanks.
Great. Thanks so much, Andrew.
For me, the advice will be more, it's good to think about the customers, because those are the main people we're always serving, our users. But my advice will be more for maybe internal use cases. So like just try and communicate frequently, especially if you're in a startup, as a person in leadership or even as a team leader or a product manager. I think what I've seen that has helped us is just continuous and frequent communication, because it seems like change is inevitable and things are changing very fast. Technology is changing very fast. The expectations and the demand, the fears, the needs of our customers are changing very fast. So if you're able to communicate internally frequently and very well, I think you're able to build products better and faster. Then the other thing is just try, as a fintech startup, just try and be reactive, but also I think just try and give yourself things that are achievable. So don't you might want to pivot and want to pivot very fast, and you end up losing. It's more like you end up losing the team, or you even end up losing the focus of the business, or even the business failing. So just even if we want to react and we want to react quickly, I think we need to also set achievable goals, so that it doesn't, over time, it doesn't become overwhelming for the team and also for you as the founder. Because now when you think about us, most of the time we are communicating with guys just through the webcam. So I think just it's better if you really want to drive change, it's better you set small achievable goals. Then if you overachieve them, that will be a bonus for the organization. But I think those two, being able to communicate well and set achievable goals, I think those two will help us as fintech startups be able to navigate these challenging times.
Great, thank you. I'm going to we have a couple of minutes left, so I'm going to open it up to a couple of questions that I'm seeing coming through. One is around the role of, we've been talking about that we have more progress to make in financial resilience, and thinking about the emerging market. To what extent are we thinking about income generating side of the equation? I think this is Tess from the Center for Financial Inclusion. Behavioral informed nudges can only go so far if a low-income household doesn't have disposable income to save in the first place. So are we thinking about income generation side of the equation in terms of financial resilience? I know, Andrew, that is something that you are currently doing with your mobile money agents in terms of when they're idle, giving them, providing them with other opportunities to actually earn income. But I'll leave this open to anyone else.
I think Tess is exactly right. And it's a separation that the industry as microfinance, financial services, moved away from many years ago. And I think you see a lot more connection points today as people re-engage with, the real economy or identifying opportunities either directly as a income generation itself or income itself, or as something that you can layer on. But I fully agree, we have to look at that.
Great. And we have another question coming in, and that's specifically for Andrew and Lee-Jen. It's that COVID-19 obviously affected your customers and operations, and just wondering what type of assistance you received that was really critical for you to continue your operations. And I think this will also help other fintechs understand, what types of investment is really critical, or technical expertise to help you continue in this time period.
Maybe I can start a little bit. So I think one of the support that we really got and appreciated was the trust from our investors and our directors. I think they gave us the leeway to really try different ideas in this challenging time, and recognizing that we needed some time to adjust our model, from something that was quite physical in terms of event organizing to something that was more online. I think they gave us the trust to work that out. Internally, like our own team was also very cohesive, because people knew there was a tough time. People were all working from home. We were changing the ways we were working. And our team was, also very patient and trusting in the leadership to see that, okay, every 3 months we may have a slightly different focus area. And they were unafraid to, question us, and we could have frank and honest discussions on, why do we need to focus on more e-learning platforms? Why couldn't we do this? So I think that was the conversations that happened that enabled us to come so far. And of course, funders and grant sponsors giving us the opportunities to really, invest in our solutions and giving us the time to work out these solutions, because solutions, especially in the tech space, is not, developed overnight. A new application would take at least 2 to 3 months to get it perfected after user testing and all. Yeah.
No, I think for us, we were fortunate enough just to be in the Catalyst Fund cohort when the pandemic hit, and we were just 2 months into it, and it was extended by another 4 months. So during that time, we got a lot of support from Catalyst Fund, especially on how to think about our data strategy, and also how to be very consumer centric. So laying out the kind of blueprints that we needed to really fine tune the products and bring most of them digital. So that support we received was very instrumental for the first 6 months of the year, and that's what we've built on, moving on until now.
Great, thank you. We do have a couple of more questions with a couple of more minutes, but 1 more minute left. So what I will do is actually encourage everyone to move to the networking room. If you see on the Feed Loop platform, there is a networking option on the left side of the menu, and some of us will be there where you'll get an opportunity to chat with us. We'll be on video and chat, so we'll be able to hear from you. I see a really interesting question right now on data protection and security risks that we'd love to answer. So what I will do is just wrap up. Thank you so much to our panelists for your time today. Really interesting to hear from all of you and your insights. And thank you to to the audience for attending. I do want to remind you that we have published the white paper with the IF50 findings. So this is from the 2020 cohort, really providing unique insight into how they're adapting in this time. It is on our website. I'll put a link to that in the chat. And finally, as I mentioned, this is a series of events, and this is the first one that's kicked off. We will have an exciting discussion tomorrow led by Tamara Cook from FSD Kenya on digital divide in sub-Saharan Africa. That's tomorrow at 9 a.m. US East Coast time and 5 p.m. East Africa. So thank you again for joining us today, and thank you so much to the panelists from hearing your experiences, and especially to our IF50 winners and of course our sponsors. So thank you, everyone.